Rental property financing rules are changing, and here's what it means for investors. Hi everyone, my name is Diloshan and welcome back to Real Estate Watch, helping you stay ahead of the market. If you own rental properties or you're planning to invest in one soon, listen up, because the rules around rental property financing in Canada are changing, and they could directly impact how much you qualify for. So here's the deal. Canada's banking regulator, OSFI, just announced new guidelines that affect how banks qualify mortgages for rental and investment properties. Now, technically, these rules apply to lenders, but in reality, they'll hit you, the investor, right where it matters, the borrowing power. So what are the key changes you need to know? Well, number one, no more double counting rental income. Before, some lenders would let you use the same rental income from one property to qualify for multiple mortgages. That's done. Now, each property has to stand on its own. Number two, stricter treatment for rental-heavy portfolios. So if your mortgage payments rely heavily on rental income, lenders will classify that as income-producing residential real estate. So what does that mean? Well, stricter approval standards. Number three, short-term rental crackdown. The CRA will no longer let you claim expense deductions, including mortgage interest, for unlicensed short-term rentals like Airbnb units. So if your property isn't properly licensed by your city, those write-offs could disappear. So what does this mean for you? Well, let's be real. Qualifying is going to get harder. Lenders might reduce how much rental income they actually count. And if you own multiple properties, your borrowing power could shrink. Now, not every lender will treat this the same. Some will be stricter than others. They all have their own lending guidelines. And you might even see slightly higher rates or tighter terms on investment property loans. So you might be asking, what can you do right now? Well, stay compliant. If you're running short-term rentals, make sure they're licensed and approved under local rules. Get organized. Keep all your paperwork clean. Leases, rent receipts, tax returns, everything. And talk to your broker early. Whether you're buying or refinancing, get ahead of these rule changes before they hit your deal. And stay flexible. Lenders might tweak how they calculate rental income. So build in some buffer and plan for that. And as always, I'll be tracking how each bank adjusts their policies. So make sure you're subscribed. That way, you'll know exactly what's happening before it hits your portfolio. And if you have any questions, drop them in the comments or email me directly at diloshan@realestatewatch.ca. Thanks for watching, and I'll see you in the next video.